You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 5th day of September 2018. So glad you could join us today. Whoever you are, wherever you are. If you are returning, welcome back. If you're here for the first time, a special welcome. If you can't see the chart I have up, go to the homepage at cfrn.net. On the right hand side, click the big microphone. Follow the instructions. You'll be registered all the way through the end of the month. That gives you one-click access to the show every day. You only register once per month. That's it. Make sure you have bookmarked our YouTube page, youtube.com/CFRN/live. youtube.com/CFRN/live. We have a dual stream, and if something should ever happen to the go-to, should it go down, I don't want you to be put out, so you can go there. All right? Fair enough. We had a bit of a sell-off overnight. you are looking at last week's weekly trading zones. I will be posting this week's zones for the entire community tomorrow, as I do on Thursdays. Might want to jot them down. You think? Seriously, I've been really recommending that, because I know what'll happen if you start using them a week behind. They'll, you know, the ones from last week, and they do you good. It's only natural you're going to want this week's. And when you do get this week's, you'll start learning how to merge the two together, and that gets pretty exciting. But if you try to go more than 2 weeks, or if you went back one more week and tried to layer that in, pretty soon you can't see price on your chart anymore. And for some people that's okay, but for us, we really like to see price right there. Okay, so price attempting to work its way back up, went from zone down to the zone. Now we're trying to get back up to the zone. As you can see here, or not, depends upon your vantage point. Zone to zone, back up to the zone, and down to the zone, down another zone. Now trying to work our way back up to last week, 93/94. Yeah. This week's, because of the way the week closed, it's in the same neighborhood, so it's not. The fact that right here that you've got last week's instead of this week's, you'll be all right. You'll be just fine. Okay, and now for a little bit of news. Scotland-based tech artist Trevor Jones has revealed he will be launching a new series of oil paintings fueled with augmented reality and inspired by cryptocurrency culture. Disruption, the art of blockchain. That's his exhibition, or as those in industry would say, his installation. All right. There will be 14 large paintings accompanying media covering various aspects of crypto and investing. These include portraits of some known figures, as well as artwork with titles such as the Ecstasy, the Agony, the Hodler. If you don't know what hodling is, hang on for dear life. Hodl. And the Day Trader. Viewers can download an app to scan each piece and trigger the augmented reality figures. Interactive art. Interesting. Now, this fellow explains his choice of subject by saying, "The last 7 years have been focused on creating innovative art that pushes formal boundaries and adds to the creative knowledge set, that challenges and perhaps even threatens the status quo. And it encourages people to question what a painting can actually be." Bitcoin and other cryptocurrencies are doing similar things with fiat and the financial sector. It made sense to me to try to tie this all together and explore the notion of a crypto-themed exhibition. Makes me want to write a poem or a song. The artist has also annexed the Scottish National Portrait Gallery to transform many historical portrait paintings into key figures of the cryptocurrency community. Jones explained, "After researching the world of crypto this last year for my forthcoming exhibition, I discovered many of the key players in the crypto community were regarded almost as royalty. I thought it was fitting that I transformed the portraits of some of Scotland's greatest historical figures, kings, queens, philosophers, and scientists, into these new tech entrepreneurs and explorers of the 21st century. Modern art. Apparently, the rumors that a Singaporean sovereign wealth-like fund has invested in the upcoming multi-billion Bitmain IPO are all just hashtag fake news. Aww. Temasek Holdings Private Limited, the holding company owned by the government of Singapore, which owns and manages a net portfolio of over $300 billion, has issued a statement rebuking the media speculations about its involvement with the Beijing headquartered mining producer going public. The company stated, "We have seen commentary about an IPO involving a cryptocurrency company, Bitmain. Temasek is not an investor in Bitmain and has never had discussions with or an investment in Bitmain. News reports about our involvement in their IPO are false." What's it coming to, people? First we lie on the president, then we lie about the cryptocurrency, then we lie about Singapore. And another blow to the hype around corporate blockchains, the Australian Securities Exchange has further delayed the deployment of its blockchain-based clearing, settlement, and post-trade solution. The exchange asked for feedback about the plan earlier this year and now reveals that respondents questioned whether the proposed implementation window was achievable given the significance of the technology. Oh, man, this will create bureaucratic jobs forever. Oh yeah. Oh yeah. A new report may explain why the U.S. and Russia are each fighting so hard to ensure that Alexander Vinnik, the suspected BTCE exchange operator, will be extradited from Greece to their hands and not to the other country. Crypto cybersecurity firm Elliptic claims that BTCE handled some funds linked to Fancy Bear, a Russian military intelligence unit that U.S. investigators accuse of hacking Democrats' emails ahead of the 2016 elections. There was a strong link between much of the funds allegedly used by the Fancy Bear and BTCE. Tom Robinson, the Chief Data Officer, or CDO, said, "What I can't say for certain is whether Fancy Bear obtained them directly from BTCE or whether there was an intermediary," he said into his cufflink. Oh, so much cloak and dagger. Swapping cryptocurrencies should not require KYC. No, that's not chicken. KYC is know your customer. Swapping cryptos should not require KYC any more than swapping a dollar bill for quarters. Unfortunately, not everyone sees it that way. In transforming into a custodial exchange, Shapeshift has lost its defining feature that was so pivotal in its success. The vast majority of users didn't choose Shapeshift for any nefarious purposes. They chose it because it was convenient. Having to send money to a cryptocurrency exchange, wait for the funds to clear, set a market buy order, cash out, and then complete the withdrawal process simply to jump between cryptocurrencies is a chore. Shapeshift promised to do the same job in minutes with no questions asked. Reading between the lines, it appears that Shapeshift's hand was forced by U.S. lawmakers, likely with the threat of subpoenas and prosecution should it fail to change its business model. That being the case, it should be noted that any other U.S.-based Shapeshift competitor is liable to meet a similar fate when it's built up enough business to attract attention. For now, at least, the following services provide an alternative means of switching between cryptocurrencies such as BCH, BTC, and ETH. Changely, Shapeshift's closest competitor, now has the chance to establish itself as the market leader for crypto changers. It offers dozens of cryptos, including Bitcoin Cash, Ripple, Doge, and Neo. An email address is required to use the service, but for those who desire their privacy, encrypted email providers like Tutanodo are always an option. Changely is not without its controversies, however, with users complaining in the last 24 hours that the exchange can hold Monero and force KYC before releasing funds. The Prague-based service should therefore be used with caution by anyone wishing to obtain privacy coins or to swap large quantities of crypto. Flyp.me, F-L-Y-P, Flyp, has wasted no time in capitalizing on Shapeshift's demise, or rebranding as it's called, because it's not really going away, it's just transforming into a service that its users didn't ask for or don't really want. Flyp, on the other hand, offers 26 cryptocurrencies, including BTC, but no BCH, Dash, LTC, as well as a handful of other altcoins. Its daily volume averages around 4 BTC, but has been on the rise in the last 24 hours since news of Shapeshift's pivot broke. Flyp.me requires no registration, not even an email address, nor does it use web trackers or third-party analytics. ChangeNow resembles Changely, but seems to ask less questions and has been operating smoothly since last year. A wide range of popular cryptos, including Bitcoin Cash and Monero, are covered, as well as a handful of others you may not have heard of, such as Pepecoin. Generally speaking, there is no need to register to use the platform or to supply an email address. However, there are some exceptions. ChangeNow uses an automated risk management system to check all transactions. Each case will be considered individually. According to European AML directives, KYC regulations, and platform requirements, we will ask you to provide a scan of your ID document valid in your country and additional information of the fund's origin. With over 300 cryptocurrencies covered, CoinSwitch boasts an enviable array of digital assets. However, their service is built upon existing platforms, including Shapeshift. Collateral damage, I see. It seems to draw most of its trades from Changely. While its range of altcoins can't be faulted, CoinSwitch would benefit from providing greater clarity on the information it requires from users. With Shapeshift no longer a viable option, there is a gap in the market for a more privacy-oriented alternative that is headquartered outside the subpoena-happy U.S. Flyp.me appears to be the best of the bunch, and that's Flyp.me. It's the best of the bunch for respecting user privacy, but is let down by its limited selection of coins. Hopefully, it will expand its service, or a new competitor will emerge that will facilitate the entirely lawful desire for an individual to simply swap one crypto for another. Well, it was bound to happen. Walmart is now in the crypto game. It's true. Like many other serious businesses, we've heard from Walmart some ambitious plans for blockchain implementation. Cryptocurrency, however, is a whole other story for many of these corporations, and the US-based retail behemoth is no exception. The technology behind it is what most of them are fascinated with. The digital, decentralized money is not on the agenda for now. While it's sweet to see Bitcoin, which has been the subject of so much hype and attention in the past year, finding its way to store shelves, not in the pricing of goods, not as a payment option, at least not yet, not at Walmart. But walk into a local Walmart and you will find amongst their cornucopia of varied products Bitcoin candy. I kid you not. Bitcoin milk chocolate coins. Chocolate Bitcoins are delivered by the Frankfurt Candy and Chocolate Company, the Pennsylvania-based candy manufacturer. The Frankfurt Bitcoins are packaged in mesh bags containing 1.5 ounces of milk chocolate wrapped in tinfoil. 6 of those should cost you as little as $1 US. That's an exchange rate the crypto community hasn't seen in a while. Now, they're putting candy on the shelf, and it really does have the little Bitcoin logo. The candy Bitcoins appeared just as the... Remember when we were kids, we had candy cigarettes? Who could have ever thought that was a good idea? Even before we knew smoking was harmful. I mean, really? Candy cigarettes? Just to puff the daylights out of those little things. Now, Walmart also applied for another blockchain patent. This one is related to the implementation of the technology that underpins cryptocurrencies. Documents filed with the Patent Office detail a blockchain-based automated system for delivery of goods and services to customers. It's supposed to use drones and robots which can autonomously authenticate each other. The systems, devices, and methods for in-field authenticating of autonomous robots patent describes a process of authentication using data stored on a distributed ledger. In the last couple of years, Walmart has filed several patents pertaining to different applications of blockchain technology. It has not implemented any of those yet. Walmart now has 12,000 stores in 28 countries, and they've got over 2.3 million employees. The largest private employer in the world. Sam Walton. I'd love to have a chat with him. Well, before he passed. All right, let's take a look at the numbers. What do you say? These are the cash markets around the world. We'll talk futures in a moment. Currently here in the U.S., the Dow is up 15 points, make it 16. The NASDAQ really got hit, down 84. S&P 500 down 9, and the Russell 2000 down 8. In the commodity basket, we had, I don't think we had crude oil today because of the holiday. It should be tomorrow. Crude oil down 86 cents. It's a little over 1%, trading 69.01 last. Gold up $3.60, trading 1202.70 last. And in the Asian markets, the Nikkei closed the session down 116 points. Shanghai was down 46 points. The Hang Seng was down 729 points. Now that's over 2.5%. The Shanghai, which was down 46 points, that's over 1.5%. And in Europe, FTSE down 75, 1%. DAX at the close down 169, that's over 1%, almost 1.5%. And the CAC was down 82 points, over 1.5%. So, bigger red day in Asia, in Europe. Here in the U.S., the only thing holding us positive right now is the Dow. Is the Dow really a cash cow? I'm sure you've wondered that very thing. Have you not? Is the Dow a cash cow? A cash cow, see? It's a company or business unit in a mature, slow-growth industry. Cash cows have a large share of the market and require little investment. For example, the iPhone is Apple's cash cow. That's something. Cash cow. Be still, my beating heart. I wrote that when I was just a child. Hi, welcome. I'm sure by this point you're sick of live training rooms and the So I think I showed you guys this yesterday. Did I? Oh, you don't remember? Well, I mean, if you don't remember, that's a different thing. Where'd it go? Oh, yeah. Okay. So, come off 30-minute. I'm going to go 5-minute. I'm sure I showed you this. Alright, if you say I didn't. Why does it do that? Oh, see, it's all messed up now. Well, by golly. Well, Jed, okay, he went like that. He went like that. My daughter's the worst in the world with that. And I was like, okay, this was a little trade from a day I like to call Friday. Towards the end of the day, consider being long 2900 to 2903. Ding, ding. I'm thinking about including one of these little snippets in the Telegram channel with each alert. Just a thought at this point. Okay, we get it. So, at this point, without any further ado, I didn't even know we had any dew. Mountain Dew or Dippity Dew? Michael, you ready?
I am ready.
Which would you rather have? Mountain Dew or Dippity Dew?
I used to use Dippity Doo.
I did too,
but
I wouldn't tell anybody, especially not on public radio. But do as you will.
Right now, though, I'd rather have Mountain Dew. Actually, just water's good for me.
I never did hanker for the Mountain Dew. Any of those?
You know, I didn't really either. It's just got so much sugar in it.
Yeah.
You remember when I used to drink soda all the time?
Sure.
I used to drink. Well, I used to drink 2 liters of Diet Coke each day. I don't know if you recall that, but
why diet? You told me it was tea.
Well, I drink tea now. I drink unsweet tea.
Unsweet.
Yep, unsweet tea, high alkaline water, Scotch. That's what I drink now.
So, we've always been, my people, we've always been cola people, Coca-Cola. But I had this one aunt and uncle, Aunt Mary and Uncle Olin. They had 2 kids, Barbara Ann and Larry. But the most unusual thing going to their house was not the mad carpentry skills my uncle had. It was the fact that they were Pepsi people.
Yeah, my dad was a Pepsi guy.
Who, in a free country, being born a man of free will, Why would somebody make that choice? I don't know.
And Coke has a lot more sugar in it than Pepsi does.
Does it?
It does. We dehydrated it when I was.
Yeah, that's probably the least harmful thing in a Coca-Cola is probably the sugar.
Yeah, probably. Probably.
We've all heard the story about how it'll eat a 10-penny nail overnight or something. I do know that I have seen people pour it on a battery terminal in a car to make the corrosion fizz up and you can brush it
Get
off.
rid of all that acid.
Yeah. So no doubt it's not it's not good for you. So yeah, it's just and he had carrier pigeons or homing pigeons, I guess they're called. Same thing.
Same thing, I think. Yeah.
This is a true story. In the flesh, my uncle, a man I knew, before there was instant messengers and email, and I mean, we're talking a long time ago, he had these birds, and he would put one in some kind of a little, I don't remember if it was a cage. There was somehow he would through the postal system, or I guess they had UPS back then, I don't know. He would mail this bird in humane conditions, to like New York City. And somebody of his there in the pigeon club would simply release the bird. Knock, knock, knock. Package. Oh, a pigeon. Okay, I think I'll let him go. So this pigeon gets let go. He's a stranger in a strange land. None of his people have ever been east of the Mississippi, you know what I'm saying?
Mm-hmm.
And here he finds himself on the patio of a penthouse apartment on 5th Avenue. He goes up, he circles twice. He's headed for Thompson, Georgia. Now, how do they do that, Michael? You know they don't have a large brain.
Yeah, I don't know.
Do you think they store their processing power like in the cloud or something? Is that how they do it?
Yeah, that's what they do. The cloud. I mean, the big fluffy white one.
Okay. Pigeon is to the bird industry what a Chromebook is to
The laptop industry.
Yeah. So you know Toys R Us went out of business, right?
Yes.
I was having a conversation with someone the other day, and the subject came up about Canada, and they're making marijuana legal all across the country, and it's coming. It's already been approved and made a law, but they got to wait so many days, weeks, whatever. Anyway, we're talking about that, and the growth industry associated with it, all the people selling the picks and the shovels and etc.
Mm-hmm.
And the person threw out a couple names, and I said, yeah, the site I would probably get if I was going to do something like that is I would get Cannabis R Us. And I would use the actual, font and everything from the Toys R Us logo, because they're out of business, so I don't think they would have a concern, right?
I'm not sure.
I'm pretty sure. And so he was sitting at a computer, and he went clickety click. He goes, "Well, you're in luck. It's available." I said, "Wow, seriously?" "Yes." "Okay. Tell you what, since you were here when I thought of it, I'm going to my office and I'm going to register it, and you're going to owe me $4. I think it's $8 a year the first year, something like that." Really? I'm like, yeah. I'm going to go straight home. I'm going to take care of it. And next time I see you, have my $4. Okay. By the time I got home, somebody, I can't imagine who, of course they swear they didn't do it, registered Cannabis R Us. that name could be worth a few dollars at some point. Yeah, I think so. The CBD, the medicinal part, or one of the medicinal parts of the sacred plant, as they call it, the CBD, that has, boy, that is really, it's legal all over the U.S. because the THC, the tetrahydrocannabinol, the stuff that makes you act goofy and get hungry, has been taken out. And so it can be sold anywhere. It can be shipped, you know, through the mail system, all of that, even though it's still a violation of federal law here in the United States. I mean, what people, you know, it's just so amazing what they openly sell in the marketplace these days. So many people did so much hard time for. I mean, you know, people did many, many years in prison for having a joint in their pocket, or, you know, some other thing. Yeah, I know a lot of them were smugglers and were, you know, bad actors and all that stuff, bad hombres, but some of them were just people, and they got caught up in something. And so it's got to weigh heavy on the conscience of those who were involved in the prosecution and incarceration. You know, like if you're the district attorney, you know, and maybe you smoke a doobie now and again on the weekends or something, and you had to send men to prison for something that you do or have done. You know, like Clinton, he openly admitted he smoked pot. He just didn't inhale. Obama never exhaled. Anyway, so that's my story. I'm sticking to it. Yeah. So, but no, my wife's done a lot of research on the CBD. I can't pronounce that one, but can never. And it's the results people have had. Everything from treating children with seizure disorders to the cancer patients use it. There really is something there. In the beginning, I thought it was just smoke and mirrors to try to get it legalized or something, but no, there's just been too many studies from too many different places that aren't connected to each other. There's definitely something there. Is man going to be able to harness it and use it properly? I hope so. I think
probably over time.
Because if that happens, then the offer of $800 that I got for Annie's CBD probably go up to like $850. I'm thinking, I don't know, maybe $900.
It's
Annie's
possible.
CBD. Oh boy, you can see the bumper sticker right now in your mind's eye. All right. Well, Michael, it's been brilliant speaking with you this morning. Would you like to do the recap now?
I can do the recap, and there's a question in there for you from David. Okay. So you can review the question. I'll do the recap. And
David.
And we'll be back in just a moment.
Oh, stand down, please. Can you?
Mm-hmm.
Are the 24/7 alerts good for multiple trades? And are the targets also good for multiple times? That is a great question, David, and yes, important prices and important areas are almost always tested. So, in the beginning, with LOGIC247, I was actually keeping track of how many times each one triggered. Or maybe it didn't, or maybe it triggered and didn't make it to the target, and then triggered again, and then made it to the target. I was keeping track of all in the beginning, but you know what? It became too much. So now it either hit the target or stopped out. And even on the ones that do, when you go through the recap and see the ones that are stopped out. In fact, this is a good way to see this, David. Yeah. Multiple entries, right? If you just go down the list and find some ones that are stopped out, and a high percentage of the time you'll see that it came back triggered again and made it to the target. But if it hits the stop before it hits the target, you gotta call it a stop. Even though in real life you might have handled it differently, we gotta be brutal. So yeah, but that's a great question, and stay with that, because that little piece of knowledge right there, what you just asked me and where your mind's going, if all you did was look for awesome trades, and when they were complete, wait for the market to repeat. There you go. There's a new trading method for everyone at no charge. All right, Mike, it's all yours.
Okay. Here we go. Let me just make sure you can see. Yes. All right, here we go. Good afternoon, everyone. Okay, and John just showed up too. Good afternoon, everyone. Today is Wednesday, the 5th day of September, 2018. If you have not taken a free trial with us, go to the homepage here at cfrn.net. And over here in the right-hand column, it says 5-day free trial. Click on apply.cfrn.net. You can do that, or you can scroll down here to where it says free 5-day trial. Click on that. You can use proprietary indicators free. You can click on that. Any one of them. And you'll eventually be brought to this page. Where all we ask for is your email, your first name, and how you found us. Click the submit button. Once you hit that submit button, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. The spreadsheet. We had a pretty good day today, though we did stop out on one ES trade. If you're going to read the spreadsheet, you read all the CFTC risk disclosures down at the bottom. As I said, today is the 5th day of September, 2018. Today we made 12 ticks in the euro, 47 ticks in crude, and we lost 8 ticks on the ES. That put us at plus $445 this morning. Today took 31 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract. And we took a total of 8 trade opportunities this morning. On the month now, we're at $397. That's over 2 days, averaging $198 per day. And on the year, we're at $23,798. That's over 162 days, averaging $146 per day. That is 1 contract, 2 hours per day. 1 contract, 2 hours per day. Okay, let's go take a look at what we did or didn't do. We didn't do anything with gold, so I'll just say that right up front. Gold was really choppy in here, and we had 1 miss right here. That was a momentum short trade that went 1 tick into profit, and then it came back. That was all that happened in gold today. Okay, and since the end of the room here, right here, we've only had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 bars paint. So yeah, nothing on gold. On the euro, we had just a couple of trades. We had this one right here. It was a break even. We missed this one, which probably would have been a break even had we gotten it. But we had this one. That was a break even. And toward the end of the room, we got this one for 12 ticks. Since then, the euro has moved around. It's had some trade opportunities. Yeah. Bounce off the BBC right there. And another one right there. Okay. That was it on the euro. Now on crude oil. Crude was good to us today. This is where we got the goal for the day. Right here. We shorted right there. We took 10 ticks profit on the first one. We had a break even there. We took another 10 ticks on that one. 14 ticks on that one. That put us at plus 34. Then we missed that one and that one. And that one. Now, these other 2 that we missed would have been profitable trades. This one would have been a break even. Then we got in here and we picked up 5 more ticks to put us at plus 39. And right here, another 8 to put us at plus 47. So we had a good morning with crude oil. Since then, though, the crude has not been giving up much at all. Okay. Yeah. That was it on the crude. On the ES, we missed a short right here. Fairly early on, we missed a short right there. And another short right there. And another short right there. So we had some good opportunity there on the ES. Then we finally went long. And this was a mistake because we didn't have 2 points up to the zone, and it stopped us out. And there was another long here that we missed. And it got caught up in the zone here for a little while, but since then, it has given a long opportunity there and there. Okay. And that was it. That was it on the ES. All right. So with that, let's bring this thing back up, the spreadsheet. Okay, if you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. As I said, today is the 5th day of September 2018. We made 12 ticks in the euro, 47 ticks in crude, and we lost $100 or 8 ticks on the ES. That put us at plus 445 on the morning. Today it took 31 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 contract, and we took a total of 8 trade opportunities. So on the month now, we've only been in the month for 2 days, but we're up 397.50. That's over 2 days, averaging 198 per day. Scroll down here on the year now, $23,798. That's over 162 days, averaging 146 per day. 146 per day. If you have not taken a free trial with us, shame on you. Now, if you've not taken a free trial with us, just go to the homepage at cfrn.net. And over here in the right-hand column, it says 5-day free trial, apply.cfrn.net. If you click on that, or click on this, or anything that says free, just click on it, and you'll eventually be brought to this page. On this page, all we ask for is your email, your first name, and how you found us. Hit the submit button, and you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click that confirmation link, then we don't know that you've taken the free trial. Okay, there you have it. With that, we can pass it back out to fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park. Dwayne, if you are ready, you can take the charts back. And John is out in the audience, so I can just open his mic right up.
Let me ask you a question.
Yes.
Recap. The recap.
Today, it took 31 minutes and 1 trade to get to the goal for the day. And we were at $100 contract.
Okay, so when you say 31 minutes and 1 trade,
Yes.
you mean it actually took 31 minutes and 1 trade?
Yes.
It's good, man.
Yeah.
Ring a ding ding. I showed a short video earlier. No, actually that wasn't the video. I couldn't find the video, but I found it. I did. Let's see, is this it? I'm gonna show it to you. It's only it's one of your 35-second variety type.
Okay.
And then we're gonna go straight away to John. Okay. So, how did this happen? Better yet, why? Okay, well, now that I've spoiled everything, alright, back to the beginning. Here we go. So, I'm thinking that with each alert, I might make one of these. Can you see it?
I can see.
Yeah. You see it moving along?
I do see it.
It was an alert from Friday, number 227. Consider buying the NQU8 at this price. Blah, blah. Oh, watch the shot clock, end of day, end of week, end of month. And right there, ding, ding. So I've managed to get the workflow to a point where I think it might be manageable. So I don't know.
Awesome.
Yeah, I think it would be a really nice added benefit, but we'll take it one day at a time. All right. So well, thank you very much. Great morning in the room, and if you can open John's mic, we'll chat with him.
Okay. John's mic is open.
Hi, John. Welcome to the show. Don't know if you're there, but welcome. Glad to have you with us. That's a hard no. Okay. Then I shall endeavor to. Oh, and I'm on 3G now. Or that'll
3G.
3G. Yeah. You remember 3G?
No.
Yeah, you were just a child. It was I think this is, I don't know, this is an iPhone 5? I'm not sure. And I guess on this phone, riddle me this, all the information in your phone, is it stored on the phone or on the SIM card?
Actually, your phone has a bunch of memory, so
Yes,
a lot
it
of it is
does.
stored on the phone.
Mhm.
Some things are stored on the SIM card, but not as much as is stored on the phone itself, I don't think.
Yeah, well, according to the guy, really the SIM card, basically the information it has is your, whatever kind of connect, whoever your provider is, it's like the bridge, but he said no, the actual information resides on the phone itself. Because I've got I've got my whole life on this phone that I dropped and broke. And I said, well, okay, my phone will not turn on. Is there any way to retrieve the data? And he goes, sure. Just go to the cloud and get it from your backup. I said, but my phone hasn't been able to back up to the cloud in years because it's full, and it says it takes so much space. You got to have so much available space to do a backup in the cloud. And that was a real problem for me with that particular phone. I deleted all the podcasts, all the music. I mean, I got rid of everything I could get rid of, and it was still full. I couldn't take, the only way I could take a picture was to delete one first. So I really would like to get, I'm sure that somebody knows how to recover that data. I mean, I can live without it, but I would like to have it. So, John, are you there? Okay.
Usually when he's there, you can hear him.
Yeah. Okay, so let me just fire off a. I'll just
Okay.
break off into what I got to do, and then he'll show up, and we'll hear him. And let's see. Your mic is on. Okay. Oh, I'll show you one cool thing, and then you can go if you need to go.
What cool thing? What is it? What is it?
I'm gonna show you. Let me find my Telegram. Okay. So now, if you go to, I don't know, the public, the LOGIC247 public recap, or maybe you should go to the, it would be better if you went to the discussion. Yeah, the discussion group. Okay, so you type at SONGG song bot. Give me the name of the song, please.
Name of the song. Whatever it is.
Whatever it is. Okay, now, which one of these do you like the best? It not only gives you the song, it gives you options.
Yeah, it does. Just one of the ones, like the greatest hits one, would probably be good.
Is that this one?
Yeah. No.
Yeah, well, you won't be able to hear it, unless, if you're in the channel you could hear it, because you just click and it opens a window in your browser, or a tab in your browser, and it takes you to son.gg, I had no idea that .gg was a TLD, a top-level domain. Remember when they had the big domain auction a while back? You know, the top-level domains? And people were buying, you know, everything. .work, .life, .me. Somebody bought .gg. So it's son.gg and then /track. So my question is where do they get this music? I mean, who gives this bot the right? I mean, it's a nice feature, and I'm glad it's there. You can do it with videos, or you can watch movies here. You can even watch a music video and continue to chat with someone at the same time. It's.
I was just playing this up.
I get goosebumps. So,
well,
hey John,
you're
welcome to the
playing
show.
right now.
Hi there. What were you talking about just now? What's this thing you're on?
The Telegram, the messaging client that we use, has these little things called bots. And you can program them. If you have some basic skills, you can program them to do pretty much anything, any kind of administrative task. And the one that I was showing Michael right now, I installed yesterday on all of our channels at SONGG. I don't know if that S is report at song bot. What's the name of a song, John? What's your favorite song?
Good Times by Chic.
Good Times. I've got a Good Times up here by oh, this is yours right here.
That's the one. Yeah, that's the one.
That's the one.
Man,
and so it'll
that's
pop
funny.
up.
That's funny. That's your favorite song. I saw them in concert last year with Earth, Wind, and Fire. Earth, Wind, and Fire.
Now, who's the band? I missed that.
Chic. I forget the guy who runs it, but he's
Chic.
Very famous guy.
That was back from the days of like
Nile Rodgers.
Nile Rodgers. Okay. I don't. For some reason, that band. You saw them in person, Michael?
I think that's who it was.
I
They
don't
opened up
remember
for Earth,
them.
Wind, and Fire. I mean, they were really good. They were really good. It was a big disco night.
Better than Supertramp?
Yeah.
Oh, wow.
Yeah, because I saw Supertramp when I was a teenager.
You know, I've been to like.
Try Madonna, Live to Tell. I like that one too.
Oh, there we go. At 2 G's. What's it called? What was the name of it?
Live to Tell.
Live to Tell. It's looking. Did I misspell it? I do not have my good glasses today. Oh, live to tell.
Live to Tell. Yeah.
Yeah, okay, maybe I did have it spelled right. Wow, I think you may have stumped it. This is the first time it didn't come back. Live to Tell. I wonder if I clue him in that it's a Madonna song.
Try I Love America by...
Oh, Live to Tell just popped up.
Okay.
Finally, it was just going slow. Live to Tell by Madonna. So, yeah, you can do videos. I mean, there's just... You can program these little bots to do any kind of clerical, administrative task. Although they every when you Google it, every page says, you know, build it in 5 minutes. So simple, you know, blah blah blah. Well, weeks later, I haven't got one completed. So, you know, it's look. I guess if you're, you know, if you're an engineer or a programmer or developer, then it does seem incredibly simple and even childish to those people. But for those of us who are not from that field, it's like when we talk about trading. You know, we sit here and we throw terms back and forth and we talk about ideas and theories that to, you know, 99% of Americans, if they listened in on our conversation, they would go, what in the heck are these guys talking about? And why, you know? So it's interesting. All right. Well, I'll put this little... I'll tell you what, John. If you haven't used this messaging platform, it just does everything. even phone calls, even video calls, and it's free. And the encryption is like, it's Pentagon grade encryption, or it actually better, I think. So they say. It's really a fascinating application. And it's so new, because when you go out there and look for developers or freelancers, somebody to create some specific thing for you, they're either, you can't find someone, or if you do find someone, they're incredibly expensive. And they're so expensive because they can get away with it. They can charge $900 to build a bot, because there's only like 9 guys on the planet that are in the business of building bots for pay. 990, whatever the number is. So, how are you doing, John? Bad day for the NASDAQ, huh? John? Michael, did you hang up on John?
I still hear you. I still hear you.
John, are you there?
I don't hear John, though. Well, John's mic must have.
Yeah, I put him to sleep sometimes. Yeah, it's just a bad habit of mine. Oh, that's right. I don't have his number on this phone. Okay. I guess he's listening to Madonna. Maybe that's it. All right. On the S&P last night, let me go to the trade alert page. And I'll give you guys an opportunity to... You back, John?
Yeah, sorry about that.
Oh, no
I might have to pick up again in a minute. But the market is really starting to act, it's just like we said yesterday, it's starting to break down through those weekly trend zones. Mm-hmm. And it put in a bit of, look, here's the thing, we're down 96 on the NASDAQ futures right now.
Right.
And we went positive on the Dow a short while ago. The mid cap is close to being positive. The transports are positive today, very strong. What it tells me is there's going to be a probable surge maybe in the next couple of weeks, where the Dow is going to get up to an all-time high, and maybe the semiconductors, because it's interesting. I keep a sort of a track of the semiconductors, the SOXL versus the TechL, and the last time I sold the semiconductors, I think we were up about 172, and we were pretty much up at the highs of the tech. And today we're 161, and the SOX are 169. So the SOX is actually technically stronger right now than the tech, which is actually a good sign. Mm-hmm. But for, if we can get past this downturn today, but the fact that we're down almost 100 on the NASDAQ's not good, not very good news. But I think, if you can imagine, we only have to go up about 600 points here, 600-700 points on the Dow to get to an all-time high. And here's the thing, we get to an all-time high, and the NASDAQ's not able to get back up to a high. Amazon maybe doesn't get, the fact that as soon as they announced the all-time high yesterday around 2050, we sold it up there, and it turned out to be the high. I didn't, because it was sort of following Apple, it didn't have that kind of follow through. And you have to be very careful, at this point in the bull market, that when the whole world thinks Amazon's going to 2,500, and it might only get to 2050 or 2,100, you have to be very aware that we might be in the waning stages of this bull for the time being. Doesn't mean to say we can't go higher next year. This guy Tony Dwyer, I think his name is, he's with Canaccord. He was on CNBC yesterday afternoon, and he made a very interesting observation, which is what we've been saying essentially. We're sort of living on, we're probably in the 8th or 9th innings, definitely the 7th, 8th or 9th innings of this bull market. But, by his estimates, he says, we're hitting new highs on so many indicators that traditionally, it's a little bit like the Greenspan, irrational exuberance. He sort of said, you've got to keep buying the dips, because if you'd done that every time since 2009, you'd be, in great shape today. And he says that we could be. He was saying we could be 3 or 4 years from a recession, and I certainly think some of my leading indicators are telling me we're at least a year out from getting into that kind of a problem right now, maybe a 1 to 2, and also when the advanced decline line has definitely peaked in the last couple of days. It's not acting well. It's not leading the market anymore. That's a bit of a problem. But the VIX right now is not signaling too much damage here, too much of a problem. I think if we can get out of this in the next couple of days, and the transports are sort of telling us we're going to, because the transports are looks like they're heading back to an all-time high, which is very bullish. But the problem is, these Chinese, the markets are dragging, to a certain extent, they're dragging the market down.
Hang Seng was down over 700 points at the close.
Yeah, no, it's a disaster. We're sort of setting up. I think the Chinese people are watching this pretty close. I mean, they're doing everything they can to turn the market around, but it's not working very well for them at the moment. All their efforts have not succeeded so far. They've had rallies, but we're not at a new low this morning, but we're pretty close. But right now we're setting up a kind of a doji.
Yeah, we've only got one zone left below us.
Yeah, so if we rally from here, tomorrow, going into the end of the week, that could still be, considered a recovery mode for the Chinese and the emerging markets. But Jesus Christ, the dollar, sorry, I went to a weekly, went to a wrong time frame, sorry about that. The dollar is, got up to the testing highs, recent highs this overnight, and finally cracked this morning, and is beginning to look like the highs are in on the dollar. If we break down below 95, we're not that far away from it now, around 95.10 or so. You could drop, if we drop another point, half a point, that's probably enough. We drop a point, it's sort of really beginning to look like the nail in the coffin for the dollar. And this is great news. This is a good thing, because it's going to help the market. And actually, this, we went down overnight, as you know, and then the dollar cracked, and the market rallied up this morning before it cracked again. But now the dollar is weakening, and the market's picking up again.
What symbol do you use, John, on the dollar?
DX.
Okay, I just brought up DXY. Is that?
Yeah, that's the one. That's the one. Yeah.
All right.
So
this is a
you can
daily
see,
chart right here.
you can see we're kind of on a sell here, and boy, if we break down, I mean, this is actually a pretty powerful sell signal developing. It could take us down to about 93. I think that would translate to about 1250, 1250 on the gold. We've got to break, and look, you've seen that last.
Well, this is all the way back to 1986, right here.
Yeah, I mean, the dollar isn't that strong, actually. It feels like it's super strong. When you look at that chart, it's not that strong. And here's the thing. Look, if this dollar breaks down, and look at that sort of daily, is that a...
That's a monthly.
Okay, look at that monthly spike. That's the key. I mean, that's a pretty big deal. If we start breaking down sort of below 94.5, 94, you can see how that could start coming apart. And just go back to the big picture again, just the way it was.
Sure. You betcha. There you go.
And if this is the last hurrah rally here, imagine if we start breaking down, and all of a sudden you're hitting, 88 and then 84, sort of going down to 80. You got a real the actual measured move. If you take the 124 down to 2007 or 2008 low, okay, to 124 to 72. That is I think that's more than a 50% drop, right? It's a pretty big drop. And then we've had this kind of complicated rally. The next leg down could take us to 60, possibly down to 60 or even 55. That's where you're going to get your $3,000 or $4,000 gold price from. And you can see, we're pretty early in the cycle. This is a 7-year cycle, and you can see what a 7-year. I mean, the only thing that's different from the last peak at 120 or so, 123, is that we've had a rally. We had a rally, quite a powerful rally, which we didn't get the last time. We didn't get it until in 2003 to late 2003. So but we, in a way, we're a couple of years out. We got a rally, so if we start breaking down to new lows now in the dollar, and I think that that would be a huge boon to world trade, be very bullish for the U.S. because exports would go up, imports would probably go down. But what it also means is the cost of producing goods in dollars gets cheaper and cheaper as the dollar gets weaker, and the goods from overseas, anything that's exported is extra revenue for the U.S. So it's a very good dynamic for a stronger economy. And frankly, if the dollar gets weaker the next year or two, 10 or 20%, that's really a potential 10 to 20% increase in stock prices, which would easily take us up to 30,000 and 3,000 plus. And by the way, this Tony Dwyer thinks the S&P is going to 3,200, which is somewhere, I think we said 3,300 a while back on this show. We said 3,300 was our target. 33.
Okay, well, when you say that's your target, do you, once it reaches that area, do you expect it to not move any higher for an extended period of time?
I think we'll have to, look.
It'll always keep rising because of the nature of. Well, go ahead, finish your thought.
Well, look, this bull market there's two ways of looking at it. By a lot of measures, it only started in 2016, in February 2016. So we're only 2.5 years into it right now, even though it feels like we're in a 9-year bull market. But according to some really smart guys, we're in a 15-year uptrend. We started a 15-year uptrend from the 2016 bottom. It should take us right up to 2030, with some interruptions along the way, and we could get some sharp interruptions, especially in the early 20s. But in the same way as it's just like if you go back to the beginning of the decade of the century, and when I said that China would, when you and I first met, I think I made the case that the 19th century was basically 1% growth average in the economies, in the global economies. Mm-hmm. 20th century was 3% average for the global economies. The 21st century could be 9% growth in and believe it or not, that was way before China delivered. But China has become the growth, the one to follow. Okay, and it's just like Trump says, if they're growing at 9%, why can't we? Because the U.S. has never grown, consistently at 4 or 5%. It feels like it's impossible, but actually, the time is probably very ripe for the U.S. to be able to grow at that pace. Because if you again take Trump's belief that $7 trillion was wasted in the Middle East and sort of squandered, if you like, in trying to rearrange the Middle East, if all that money had been kept in the U.S. and remember, the dynamics are changing very positively for the U.S. because when you look at North America as a unit, which is going to be more the case once the new agreements are in place. you know, the North American bloc is the largest oil producer in the world by far, with sort of 18, 19 million barrels a day between Mexico, Canada, and the U.S. But even on its own, with the U.S. now being, you know, the biggest natural gas reserves in the world, and certainly, you know, all-time record oil production, it's dropped, it's taken, you know, it's saving a lot of money going overseas. You know, there's only, you know, Saudi only comes in with about 1 million barrels a day these days, whereas versus 3 or 4 million years ago. So all that money that was getting sucked out of the country is staying in the country. That's helping growth. And the, you know, as exports improve, if Trump can fix these trade barriers and prevent 500 billion going out the door every year to China, you know, it's a gigantic plus for the U.S. But the biggest, the most positive dynamics for the U.S. to grow exponentially at a higher rate than it has in decades is the infrastructure that needs to get fixed. You know, the improvement in infrastructure is going to take, according to some people, $3 trillion, you know, over the next decade or so. And this, you know, injecting $3 trillion, no matter how it gets done, is really, you know, is going to, it's just like, look, in China, you got the autocratic government who've basically created the growth. I mean, the country has exploded from a rural type economy to an industrial economy and a production economy, and so, you know, they've gone from scratch to building super highways and high-speed rail and all that kind of thing, and airports everywhere. So that's why they've grown at 9%. But we need to do the same thing. You know, we need to upgrade so many parts of the infrastructure and the economy that it has the potential to add several percentage points to the growth. I'm not saying the U.S. Look, we might grow for 6, 7, 8% for one quarter possibly, but if we can maintain an average growth for 4 or 5% going forward, that is going to be just gigantic for the U.S. And you know, remember, Australia has gone 3 decades without a recession. There's, you know, and with a businessman in the White House who's getting rid of all these regulations, you know, the whole dynamics have changed. The economy is performing better than it has ever, almost, and the this momentum is sort of carrying it's sort of you know, the success of the economy is creating more success and more potential to be sustained. You know, and we're not overheating. You know, there's not inflation is not a problem yet. It's probably several years away still, and so the economy is not overheating. There's still plenty of credit. The banks are doing well. You know, there's almost no negatives that normally restrict you know, growth. And he was making the point yesterday, this Tony Dwyer, about, you know, the credit, when the credit dries up, that's when the economies get into trouble, and that's when we start hitting a recession. So, you know, there's no sense of that. There's plenty of venture capital. You know, people have made so much. I mean, we've increased the net worth by 12, 13 trillion. There's just unbelievable amounts of money available to keep this economy moving, and the economy is generating more revenue today than ever in history. You know, being a $20.5 trillion economy, it's looking incredibly good. You know, obviously there's always a chance that it could get, you know, nipped in the bud for some reason or other, but the dynamics continue to be very positive, and a weaker dollar definitely is probably going to be. Look, if the dollar goes down by 50% in the next, we're 7 years into this 7-year cycle, we're 5 years left. In the next 5 years, if the dollar goes down by 50%, the stock market can rise by another 50% from here. That's something that nobody saw the 20,000, 27,000, 26,000 Dow coming, you know, a couple of years ago. And we've gone up so dramatically that there's probably there's certainly a few, look, it's like I said, we've got 2019 coming up. Believe it or not, in a normal business cycle, a normal presidential cycle, the stock market has gone up in the past as much as 50% in the 3rd year before an election. And here's the thing. look, the Fed's, we've got a meeting on the 25th, 6th of this month. Fed's probably going to raise rates, I'm pretty sure, unless the market tanks or something. And when they raise rates, you know what? It could actually accelerate everything. It could actually cause stocks to go higher, because that's one thing that I've talked about. This is when we got the 87 scenario, we had that correction just like we had earlier on this year, and then the market accelerated higher, but it went up 30% in 3 months. It went up a bit too fast, and went up as soon as the Fed raises rates, historically the dollar should go down. And this is what happened in 87. The dollar went down, but it went down into a free fall, and that's part of the reason why we had the crash in 87, because the interest rates were rising, and we haven't gotten to that stage with stocks yet where interest rates and stocks are rising together at a pretty phenomenal rate, much as they were in 2005 to 2007, before we had a kind of an 87 type crash, which stretched out over 2 years from 2007 to 2009. In other words, we got overheated. The economy is not going to overheat until interest rates start rising and the demand for money increases to substantially more than what it is at the moment. In other words, putting the price of money higher and getting the economy more normal and back on track. And remember, there's other dynamics going on, including the stimulus that's still going on around the world, and now a new stimulus that's being developed in China. All of these things are really pretty, they're creating a continuity of this upward momentum. So I think that this Tony Dwyer made a lot of sense yesterday when he said, you've got to be buying pullbacks until we get until proven otherwise, and it makes a lot of sense. Look, it wasn't so long. Look at the beginning of the year, we were down 11. We went down to 900 on Amazon. I think we went under 1,000, and I think we shorted at 1184 and went down to about 900, somewhere like 930. I think it was where it turned. I mean, look at it today; it's doubled in price. And that was one of the easiest trades, because Amazon's been the analysts have been moving up their targets quite aggressively on Amazon, and you've got these these four contenders to be trillion dollar stocks. Two of them have hit now, Apple and Amazon. There's still Microsoft and I guess Google is the other, right? There's still Microsoft and Google that are contenders. Right. And it's not going to take much for Microsoft to get there. When you look at what happens when stocks get up, over $100, they can. This stock could sprint to $20 higher, real easy. And obviously that'd be very bullish for the market if that happens. So. And here's the thing: the 87 scenario is sort of playing out a little bit in terms of the way we corrected earlier on this year, but the correction was much longer. In 87, the correction started in April and finished in May. Or late March, finished in May, and the market was 30% higher by July the 25th or so.
Yeah, you need to get that.
So. No, it's okay. I'll pick it up later. So by the 25th, and so it was a very short and sharp rally. This is a much more. This rally is, the whole process has taken longer. We went from a January to May, June type correction, even right in by some measures, even now with the emerging markets. This is. It's certainly a 6-month correction in the U.S. It's more of a 9-month correction in the emerging markets. But having had a 9-month correction, it's giving the upside now could be a lot more than 9 months. It could be 18 months. It could be a couple of years or more, having had that correction. So but the thing about this market is it's still got the potential to go exponential. I mean, seriously, exponential in a similar way to to what happened in 87, but on a stretched out over a longer time frame, possibly going into 2019, which would fit with the 50% potential rally that we could get in in a normal third year. I don't think we'd get that, but you can never say never. In 1999, which was correction, it was a presidential year. Pre-presidential year, the market went up, the Nasdaq went up 100%. So, and obviously, if Amazon goes up from here to 2,500, that's a 25% move right there. Or sorry, it's not 25%. It's another 15% or so, 12%. But it's still a big deal, and that could lift the market substantially from here. It'd be enough to certainly get the Dow to about 27,500, 27,700. That's a tricky level for the Dow. That's a potential top there. Now, but we could have a top. We could have a pullback, and then we could hit. Maybe we're not going to hit 30,000 till going into 2020.
What do you know, John, about this euro dollar? Symbol GE, trades on the Chicago Mercantile Exchange.
Used to watch it a lot, but I haven't really spent much time watching it recently.
The thing that jumps out, I was looking at something else, but this, the full margin for this euro dollar GE is $484, and the day rates, which are basically 23 hours a day, $214.50. That's with the exception. I'm looking at the LIBOR. The LIBOR is $143, but look at the vol. Most of these things you never heard of, it's for a reason. But I come here and look at the volume. I mean, they've done 183,000 futures contracts today in this.
Not much range, huh?
224.
Can you bring it? Show a decade of history.
Well, I can go. Well, here, let me do this. Let me go at GE. At GE. Hang on. Let's see. At GE. There we go. 3-month euro dollar. Okay, now that's daily. Let me put it on weekly. Let's see.
It's actually an interesting chart because this thing was jammed up towards 100 for quite a long time, as rates were very low. So what it's telling us is it's telling us rates are going to rise for sure.
Really? Now, yeah. help us understand how you arrive at that conclusion, just based on.
Well, 100 is 0%. So 97.8 is about 2.2% right now. And if the Fed raises rates, that should. But the fact that this thing is going down is
look
a
at
little.
I mean, it's at like historic all-time lows. I mean,
my
data only goes back to.
It's been way lower than that.
Okay, well, my chart. This only goes back as far as 2014.
Yeah, no, this thing back in 1982 was probably at 60 or somewhere like that.
What is it? What is the euro dollar?
It's not like a treasury bond. It's not a 30-year. It's literally the current interest rate, basically.
It says here, euro dollar contract unit, euro dollar interbank deposit having approximately $1 million principal value for a 3-month term to maturity for spot settlement on the 3rd Wednesday of the contract month. IMM price points, 100 points minus the 3-month London Interbank offered rate for spot settlement. Boy, that gets real confusing real quick. 1 interest rate basis point, 0.0 1 equals a $25. Okay, so this is taking it out. If
Back
you're
in
saying
1980, this thing would have been probably around 69 because of when the interest rates were 21%. So that give you an idea.
look at now. I don't know what that's all about. I just ran a 30-minute chart. This may not be good data. I don't know. I have no reason to think it isn't, but
Could be.
Anybody in the audience know anything about the euro dollar? Oh, and Karen had mentioned earlier that Friday we've got the big jobs number, and we often rally into that.
Yeah, that's what I was saying yesterday. And based on, look, right now the Dow's gone back to positive again. It's on the high of the day. The S&P is cutting its losses, and the mid cap is about to go positive. So, you know, this is another one of those sort of buy dip type scenarios and the VIX is not going anywhere. So the VIX is kind of telling us that the market's probably going to have, you know, a pretty good rally after this. You know, what's happened is, remember, we had a huge up month in August. So far, we've had 100. You know, we probably went up 2,000 points in August or something like that on the Nasdaq. You know, we've had 100-point pullback into August. It's you know, if that's all the test there's going to be, it shouldn't be too long before the Nasdaq's back to making new highs again.
Was today the largest one-day sell-off in the NQ? Did I hear that somewhere?
Okay,
was
well,
that dramatic?
Here's the thing: August range was from. It's actually the August range was huge, from a low of 7,214 to a high of 7,697. So, was about a 500 plus move, and we've come back 100. So far, and a 500 plus up move.
So this is a daily chart on that thing. And now when I bring up like a 30-minute or an hourly chart, it looks like it's bad data or something. But this is a daily chart. I mean, there's days that this thing does 354,000 contracts. There's 310,000 so far today. It's done 183,000. And every 0.01 is worth 25 bucks. According to the CME website. 1/4 of 1 interest rate basis point. So that's okay. So this is the interest. 1/4 of 1 interest rate base point equals 0.0025 price points, or $6.25 per contract. Okay. This is very confusing. This is probably why more people don't trade it. The nearest expiring contract month, which would be U, 1/4 of 1 interest rate basis point equals 0.0025, or $6.25 per contract. All other contract months, everything except the U contract, 1/2 of 1 interest rate basis point equals 0.005 price points equals $12.50 per contract. The new nearest contract begins trading in 0.0025 increments on the same trade date as the last trading day in the expiring old contract. I'm gonna have to ask Bert to come on and explain this to us. I mean, I'm interested in it. I think I would like to trade it, but based on the charting, though, you would have to trade it almost. I mean, I could trade this very easily simply on a daily chart. But what happens when you go down to like even an hour chart? It just, look at that.
Yeah.
That doesn't even make sense, does it? So I'll check in with Bert. There's got to be some reason, with that much volume, there's got to be some reason that more people don't talk about it and trade it. And, I mean, the margins, you know, gosh. We should all just look at it. All right. Okay. You know, Twitter's testifying today. Jack Dorsey, he says he's defending, I don't know what he's defending because I didn't have the volume on, but I saw it flash on the screen that people consider Twitter to be the public square. But they're, you know, providing a community service, which I guess, you know, I guess they are. I mean, it's free. People use it. You can, I mean, I can't believe they haven't somehow integrated that into their marketing, but maybe because it ended so tragically. But these, what was the spring uprising? What was that called a few years ago? Not the Arab Spring. What is it? Or was it? What was it called, John? When Libya and everybody, all that stuff was happening. Somebody in the audience maybe can help me. It was something spring, and it was really fueled by social media and Twitter. It's the only way people had to communicate, and how the rest of the world knew, in actuality, what was going on there. So Twitter is almost like a utility. I think we might have had this conversation before. You know, like electricity and water and sanitation. It's the telephone lines. You know, it's a utility. What do you think about this? Let's see, how did this go? Is it Time Warner buying AT&T or vice versa? How's that work?
AT&T is buying Time Warner, I think.
AT&T is buying Time Warner.
Yeah.
Okay. Now, if that doesn't scream monopoly, I don't know what does. Don't you think?
Absolutely.
But apparently they're gonna approve the deal. So
yeah,
somebody's pockets are getting lined real nice off of this. I gotta believe it. So, all right. Well, I'm gonna look into that euro dollar. What else you want to go over today?
Just that the oil after that rally yesterday sort of has gone back into the big slump we talked about, and it kind of looks like it's going to be maintained for another day or two. The oil.
Marcus just confirmed it was called the Arab Spring. That's what it was.
Arab Spring, that's what it was, yeah.
Thank you so much, Marcus.
Yeah. So,
oh, I had a good example I wanted to show everyone here. We had an alert on the Dow to consider selling 25,975, and this was the target right here, right above that old zone. So what do we got? 29. I guess it was 955. So it was just a 20-point trade coming into a zone. Just very, very pedestrian. So you could have gotten out at the target and gone on your merry way, or as I put into the telegram, I said run your indicators and try to use the exit signal, which is here. So to the audience, if you got short 25,975 in the Dow, would you rather get out at 955 or would you rather get out at 915? It's an extra $50 per point. I think I figured it out to be. And all you have to do is be patient. Yes, it hit the target. Yes, this is a previous zone. It might consolidate. It might reverse. Who knows? That's the point. We don't know what's going to happen next. So until the market tells you that it's considering a change, then I can't encourage you enough. You work really hard to get into a profitable trade, and so stay in the profitable trade you know, as long as you can until you reach a point of diminishing returns. You know, like you don't want to hand over, you know, what you earned. And it really bugs me when people talk about winning. You know, oh, I won. You know, I had 3 wins and only 1 loser today. Oh, you went to Vegas. Oh no, I was at work trading. Oh, so that's gambling? I mean, it's just, I don't know. It bothers me. But when the step line gets on the north side of the CFMA1 on a short trade, the first green close above that step line on the backside, that's your exit. Okay. Now, does it get you out at the swing low? Nope. As long as you're trailing a stop, just period, nobody gets out at the exact swing high or the exact swing low unless they just got lucky. That's it. That's it. And we don't trade off luck. So, right there. Now, did it go even lower? It did. Okay. And as you gain experience, you'll learn how to re-enter these and take advantage of this little window of opportunity here. So, anyway, I just want to point that out to you guys. Anytime you get into an extended move with the Concierge Trade Alerts or with the LOGIC247 L2, if you run this, it can turn 20 points into, in this case, it would have turned it into 70 points. So, there you go. That's our tip for the day. Anything else, John?
Yeah, can you put up the transports?
I sure can. Give me one. There we go. Give me a symbol, please.
TRAN, maybe.
TRAN. You know, this thing's pretty good. I'll just type in Dow Transports and it'll find it. There we go. DTYO is what I show. Yep. Now this is, I only get end of day data on this.
Looking pretty strong, right?
You want? Oh yeah. Do you want it on daily, monthly?
Actually, what can you? I just noticed on your thing, you can get it just to, you know, it looks like it's about to go to a new high. That's really what I was going to say, but which is extremely bullish.
Yeah. Unfortunately, I can't go smaller.
Yeah, no, that's okay. Can you go? Can you put in Dow Nasdaq transports? I see there was a Nasdaq transports there.
Oh, I didn't know that.
I haven't seen that before.
Nasdaq transports. Do you see it?
I saw it earlier on. Maybe I misread it. I thought I saw it.
Okay, well let me put back in Dow and we'll see.
But you can see how that thing looks like it's poised to break pretty sharply higher here.
Yeah. Yeah, it must have been something else.
Yeah.
Yeah, I mean it definitely. Well, we've hit it.
You know, if that thing goes to a new high, it virtually guarantees the Dow is going to go to a new high. So it's worth it's you know, something to pay attention to.
You used to talk so much about the Dow Transports as a leading indicator, and I know you still use it. Do you consider that to be one of your most important?
Yeah, because you know when the transport's leading, more importantly, when the transports and the mid caps are leading, it almost doesn't get any better. And I've explained that before. You know, in 2009, when things were looking really bleak, we predicted that the transports and the mid cap would hit a new all-time record high by 2011, and that's what they did. But you know, the Dow and the rest of the gang didn't hit new highs until 2012 or 2013. So, you know, the fact that if we hit new highs later this week on this transport and the mid cap, it's just what we were saying earlier on. It extends this market out a year or two beyond where we are. And you know, I said this when we first hit the 4% growth number. Remember what I said? I said, you know, the last time this happened in 2014, the market went up for a whole year before it topped out. It didn't top out till August 2015. So, in fact, it was about a year and a half. So, what's going on here is really very encouraging, you know.
Yeah, look at this, John. On this other platform, I just brought up that euro dollar. Okay, now here it is on the daily, right? And I have the data is just delayed for this one. It's not end of day. So I mean that looks like a perfectly normal chart. But as soon as you go smaller than a day, it falls apart. And there's got to be some. That's a 4-hour chart. That's the darndest thing. Now the transports, that covers all types of transportation, ground, air, and so the theory being that when everything's humming, running on 8 cylinders, good for the economy, and things will follow. Is that basically how you see that?
Yeah.
TL said double top. Well, TL, you know, oh, you're talking about the transports. I'll go back there. This euro thing has me really puzzled. But let's see. DTY. Oh, back to the down. Guess I got that wrong. Got transports. There we go. And now it's similar. Okay. Dow Jones transportation. Oh, and here's another symbol, John. Dow Jones transportation average. That's not what we looked at before. Although it looks almost identical. Yeah, and on this one, LT or TL, you're right. We do have that double top there. And if we take out this low, which lines up with this high right here, then what are your thoughts on that, John? Do you think this is the turnaround point for the transports?
Yeah, as long as we don't come off too much this afternoon, I think we'll be all right.
There's a gap.
Yeah, there was an upgrade on UPS yesterday, which I think is helping.
Really?
And yeah, and the Federal Express took a little time to get going, but it's actually acting really strong today.
Well, now you know that's surprising because Jeff's taking his business away from them to whatever degree he can, as I understand. I don't know. The advertising here in Phoenix has been, well, let's just say this. I've seen a lot of ads. Jeff Bezos is encouraging you to go into business for yourself and deliver packages for Amazon. You start out, I think, with one van, and then he wants you to be able to expand. You know, you've got to have the credit or whatever. Or no, wait. No, he arranges the lease. How does it? Hang on. Now you got me started. Drive or deliver. That's better. Deliver for Amazon. Okay. Amazon Flex, be your own boss. I want the deliver for Amazon. Start your own business. There we go. Sign up for Amazon Business. That's not it. Okay, start your business. Own your success. If you love building and leading teams, start your own business as an Amazon delivery service partner, delivering smiles across the community. They're looking for hands-on leaders, passionate, etc. Low startup costs. Start your business with as little as $10,000. Now this is quite groundbreaking, John. The largest company on the planet, richest man on the planet, now creating start your own business opportunities for Ma and Pa Kettle. I mean, this, I don't know that no one's ever done this before. I'm not saying
Interesting idea.
Use our technology, processes, and more than 20 years of logistics experience to set up and run your delivery business. Amazon's packages keep your business growing so you can focus on building a great team and delivering without worrying about driving sales. Amazon's experience is behind you. Okay. I think they want you to eventually grow to, right, this guy's got 40 drivers. Let's see, in just 5 months, I hired more than 40 employees, and it's encouraging to know that any driven intellectual can leverage the support from Amazon and the delivery service partner community to build a successful, thriving business. Veterans. At Amazon, we're constantly looking for hands-on leaders. We're committing $1 million toward funding startup costs for military veterans, offering $10,000 reimbursements for qualified candidates to build their own business. That's quite a deal, quite a big deal. I wish this guy wasn't so, yeah, they've already negotiated. If you get accepted by them, by Amazon, then they've already negotiated either the purchase or the lease of the vans. They got, you know, all kinds of stuff. So this doesn't go into as much detail as the original article, but yeah, if you get a chance, check into it. I mean, it's and the fact that they're not tooting their horn about it, so to speak. Maybe they want to give it some time to see how it works out, but for Jeff Bezos to say to every American with a driver's license and a clean record, I guess, hey, I'd like to partner with you. If you can come up with $10,000, I'll put all of my resources to work for you. Leverage the power of Amazon with 10 grand. Like that guy that I had up on the screen, yeah, 40 employees. He went from probably working for someone else to having 40 employees. Here's the steps you got to take. Submit the basic information, fill out an app, 3 weeks of hands-on training. Okay, what we do, our exclusive deals on Amazon branded vans, comprehensive insurance, industrial grade handheld devices, and other services help you get your delivery business up and running. We give you 3 weeks of training to ensure you're set up for success, starting with a 1-week introduction to Amazon in Seattle, followed by 2 weeks in the field, working alongside a community of existing owners and drivers. We give you all the tools and technology you'll need to run your business, including daily processes. Owners receive ongoing support from Amazon, which includes a comprehensive operations manual, driver's assistance for on-road. Are there opportunities near me? Well, by golly, looks like there is. Right there. Your success starts here.
Put the map up again.
The map, yeah, there you go.
Interesting.
And that little white van shows up at my house 3, 4, 5 times a day. With the and there's a new thing going on. I don't know. You may have heard of this. I saw it on the internet before it started happening to us. Packages that you did not order starts showing up at your house from China. You heard about this?
No.
Mystery packages from China. It's right there. I've heard a couple different theories. Here's one. Oh, there's a recent podcast. I think I listened to that podcast. Heaven McGeehan awoke one morning to find an unexpected package from China delivered to her Pennsylvania home. It was a small e-packet, a special subsidized shipping option that UPS offers Chinese merchants. I can send something, a China businessman can send something to my neighbor cheaper than I can, but that's a whole nother, we need to talk about that on another show. To Chinese merchants, effectively enabling them to ship a parcel from China to the U.S. for less than it costs to send that. That's what I just said. same parcel domestically. And when she opened it, she found a small handful of black hair ties with cheap plastic hearts that had the word Phoenix on them. She was bewildered. Package was addressed to her, her name was correct, but she was not the one who placed the order and had no idea why someone in China would send it to her. Then the following day it happened again. Another unordered package from China arrived containing the same item. And then again, and again, and again. I hadn't heard of that. I received at least one a day, sometimes multiple. She then sent me a photo of the haul that came in while she was away on her recent 7-day vacation. That's all these envelopes here. Okay, now why are people in China sending some random woman free hair ties? It's called brushing, and even in China it's illegal. Chinese agents shipping ridiculous amounts of hair ties to McGeehan is merely an unscrupulous way for them to fraudulently boost sales and obtain positive feedback for their clients' products on e-commerce sites. Now, my wife and I the other night, we had a discussion, and we think, and it may be about to tell us, but Amazon, if you are using them to warehouse your product, you have an Amazon store, you keep your product at Amazon and they ship it for you, that's all part of the deal. If your product sales slow down, then you have to come get your merchandise or start paying rent. In other words, if you don't have enough sales to justify the floor space that your merchandise is occupying in their warehouse, so they could be running fake sales through. Basically, a brushing firm got a hold of McGeehan's name and address. She imagines this happened when placing legitimate orders on AliExpress, and then created user profiles for her on the e-commerce sites that they wish to have higher sales ratings and favorable reviews. Then they shop for orders via the fake account, compare prices, and mimic everything an actual customer would do before finally making a purchase from their client's store. When delivery is confirmed, they then leave positive reviews that appear to the e-commerce platform as verified. I mean, they're so, John, they call my wife in the middle of the night, they send emails, please, you know, I'll give you this, I'll give you that, I'll give you this, you know, will you take a video? These reviews are critically important to them. The hair ties that she receives are more than likely not the actual items the Chinese brushers are leaving reviews for. Basically, they're low-cost stand-ins for real products. It doesn't really matter what is shipped in the package, as long as the person receiving it has nothing to do with the exchange. But at least McGeehan is actually receiving packages that contain something. I've been receiving reports from unsuspecting and often confused people whose mailboxes are being filled with parcels from China that contain nothing. Due to the unbalanced, due to the unbalanced pricing policies of the U.S. Postal Union and subsidies from the U.S. Postal Service, it costs people in China virtually nothing to ship small packages to the U.S. That, combined with the super cheap prices they pay for the junk they ship, makes brushing a quick and cost-effective way to move up the sales rankings, which means everything for e-commerce merchants. On most platforms, there are algorithms which rank and order sellers in relation to how many sales they make, how much positive feedback they receive. There's a reason why some sellers appear on the first page and others are buried at the bottom. These sellers are gaming the system. Brushing actually works. In 2015, a team of researchers tracked the sales of 4,000 sellers using brushing methods, and they were able to raise their rankings 10 times faster than they could via legitimate means. Various forms of brushing, some involve bots, some consist of hiring people to buy products and leave reviews, hacking otherwise legitimate accounts. While brushing is illegal in China and probably constitutes false advertising and mail fraud in the U.S., in the case of McGeehan, the infringement is happening across international frontiers, which means that the offenders can operate with complete impunity. This really is, this is not the world we grew up in, is it, John? I'm the author of Ghost Cities of China and have been traveling perpetually since 1999 through 86 countries. So that thing we saw in 60 Minutes, I don't know if this guy was involved, but he wrote a book about it. Over the next couple decades, it's estimated 250 million Chinese citizens will move from rural areas into cities, pushing the country's urban population to over 1 billion. China has built hundreds of new cities and urban districts over the past 30 years, and hundreds more are set to be built by 2030 as the central government kicks its urbanization initiative into overdrive. As China redraws its map.
That's why the country's been growing at 9% or
yeah,
7%.
Anyone in the audience, if you have not seen the 60 Minutes piece on the ghost cities of China, you really should watch it. You owe it to yourself to watch that. It's eerie, but now that I see there's actually some method to their madness. I mean, it's like they were just building for no reason. But apparently they have a reason.
That's why the Chinese, miracle is starting to get into trouble. And that's why they're trying to stimulate their way out of it right now, because it's definitely, if the Chinese market breaks down anymore, it's probably going to drag the rest of the world down with it, including the U.S. So it's something to keep in mind.
The story of cities without people in the world's most populated country.
That's the reason why the markets are down today. It's not just this testifying thing, but the whole, this bad shakeout last night has definitely got people's attention. And the European markets also acting very bad today. So,
Asia was red. The European markets. Yeah, I got those numbers right here. I just went over them earlier. The FTSE closed down 74 points. The DAX, I show the DAX down 169, and the CAC was down 82. And then over in Asia, the Nikkei was down 116, Shanghai was down 46, and the Hang Seng was down 729. 729. Now, is there no futures contract available to trade the Chinese market? I find on my platform, I find the U.S. I find the renminbi. Renminbi, how do you say that?
Renminbi.
Yeah, it's right here. The Chinese. But last night, RMBU8. I'm going to try that. RM. There we go. Yeah, same thing as last night. It's got a symbol. Try RMZ. RMBZ. Yeah, it shows up. Oh. Now the December contract. Apparently there's been 3 contracts that changed hands. RMBU. RMBU8. Try it one more time.
Yeah, the way this market's going now, the way it's breaking down, it could be a bad afternoon. The Nasdaq's really got the jitters today. And, it's down 100 now. Its ability to come back this afternoon is diminishing rapidly.
Yeah. Okay. Yeah. Hey guys, 88 to 85. I don't know that I'll have time to get that out, but I'm going to attempt to. No, I won't, because I've still got more stuff to do here. So, okay, guys.
Okay, well, listen, thanks very much for the invite.
Thank you, John. I enjoyed it,
right.
and look forward to talking to you tomorrow.
Okay, bye.
All right, bye-bye. Okay, I'll take care of John's mic. Put him on mute so that he can move about the cabin. Any questions, guys, just put them in the chat box. Remember, especially if you're new, no one sees what you type except myself, Michael if he were here, Bert if he were here. So, don't be shy. Ask away. There's no bad question. Okay. 28. Okay. 28.88. You could go 87 to 84 if you wanted to. 28.84. Okay, we'll see what happens with that. Oh, ooh, that's right on top of a zone. So, okay. All right, we'll see what happens. If you missed entry, try 28.87 to 28.84. Weekly trading zone at 28.83 / 28.84. So now you know. In fact, maybe I'll just put, it's late Wednesday afternoon, maybe just put them all out. If you missed the entry. Yeah. Okay. So let's see what our friend the Dow's up to here. Okay. Now, where's this week's zone in relation to where we are? 2.5. We've got a zone at 25.990. Basically, that's what this is about. That's what this is about. And then below us, 920 is a zone this week. 25.920 to 925. Okay. So that puts in perspective the movement that we've seen here. So okay, so this will be number 257. I am U8 25955. What's that zone again? 920 / 25. Yes. Okay. Ooh, 259. Oh, come on. Okay. What's the Russell up to? Crude. Oh yeah, we're right on top of a zone. Crude. Crude. No, I'm sorry. 69.60 was a zone. Okay, right back up to touch it. Confirm good resistance. 69.60/65. This week's 60. Now that's beautiful. I know that sounds weird. That's okay. I get that a lot. And now the lowest weekly zone for crude, 68.40/68.45. Well, that's a predicament. Because, okay, if this could be support, then we have the actual zone 40/45. So getting short, we have to keep in mind that until proven otherwise, we expect this to be good support. However, this could be good support, 68.60. So the bottom line is I just don't have enough room. Oh, there's room to put on a trade. There's always room to put on a trade. It's like Jell-O. There's always room for more. But there's no high probability, low risk trade here. See, there's a difference. There's always a trade setup somewhere. But if it's not high probability, low risk, well, and those are just empty calories, draining your pocketbook. And it is sometimes, you know, or it used to be until you get a grip on it, frustrating to know that there's money on the table. But because of the things that you believe about the market, if you truly believe them, not just say you believe them, I call them market truths, and all of us have market truths. Doesn't matter how long you've been around, you've got market truths. You just may not be in touch with them. Okay. So I see this money sitting here. Come and get me. But because of my own personal market truths, which if I don't honor them, then pretty soon everything gets loosey-goosey, and then it becomes utter chaos. And I don't want chaos. Now, a market truth, I know you've probably heard me talk about this before, but a market truth is when you make a statement about the market, or I ask you a question about the market, and you give me your answer, and I say, why is that? And you go, because you never thought about that part of it. I was at a seminar in Vegas, and this tall guy with a really deep voice and a swagger when he walked said it. I heard him. Okay. So a guy in Vegas, tall, deep voice, swagger. He said that at lunchtime he never did disclose who they are, they will run your stops. And back home, you've now translated that into, I can't trade during the lunch hour because the locals will run my stops. See, now to you, that's a market truth. You believe that. You believe it. And I'm not picking on anybody that actually does believe that. That's not my point here. See, if you want to believe it, if you want it to be your market truth, then the answer cannot be, I heard some guy say it at a seminar. You actually have to take that thing, whatever that thing is, like when you hear me talk about the zones, all right? I've taken them out in the light of day, you know, and they stood up. I hung them over the fence, beat them with a broom, they stood up. I tried every way possible to disprove the validity of the very thing I had found. You've heard the story before about, the atheist who's writing a book, and during, the writing of the book and the research, he comes to know Christ. That's a true story, and I've heard it a number of times. So with the zones, I did everything I could to just invalidate them. But I couldn't. Truth stands. So it's okay that the guy in Vegas said this thing. He gave you a seed, and now you take that seed and you go find out if it really is true, at least for you. What I'm saying here is so critically important, because there's a lot of voices out there other than the ones in your head. Okay? A lot of voices speaking all kinds of stuff that, at some point everything starts to contradict. When you got 5-6 indicators on your chart, you may have seen it. Sometimes people grade their trades. Well, I have 10 things and 7 of them said go short, so I went short. If I don't have 100%, when I'm sending you alerts, I can't send you anything less than what I consider to be my best work. Now, whatever that means to someone else, I don't know, but I know what it means to me. And so I used to talk about this more, but if you've never heard me talk about this, if you haven't done the exercise, I encourage you, if you really want to be a trader, if you really want to become a consistently profitable trader, take a little time, go sit in a park or somewhere in your lazy boy with a legal pad, remember those, and a number 2 pencil, and make a list of what you believe about the market. I believe I always get stopped out. Okay, that's what you believe, write it down. I believe Tuesday afternoons are really good for crude. Okay, if that's what you believe, write it down. I believe, I stopped believing all. Now, I did that. I went through all the things, all my market truths, and I got rid of a lot of excess baggage. Oh, when I use tick charts, if I use a fib number, a Fibonacci number for my tick chart, that's going to improve, my production. I used to use an 89 tick chart and a 144 tick chart and a 233 tick chart. True story, Michael and I met over a 233 tick chart. And you're going, what the heck is a 233 tick chart? Well, I'll show you. It's just a chart. Okay, custom. Tick 233. 233. Okay. So here's the S&P on a 233. I was doing some work here in my part of the country with the fib number 233 and applying it to a chart of the S&P. Now, in my research, Michael had made a post on a forum, I think years before, and he mentioned a 233 tick chart. So I sent a message on that forum. I said, I don't know if you're still around or if you still look at this, but I'm working on something similar. If you're there, answer. Next thing you know, we're sending emails, we're talking on the telephone, and boom. Radio happens. Stuff happens. So So what does this mean, 233 ticks? It's not a volume chart. It's not how many, it's not 233 contracts, it's 233 transactions. 233 transactions. So it could be one contract, 100 contracts per transaction. Doesn't matter. Again, it's not a volume chart. A volume chart would be something a little bit like this. Click volume and go 10, 1, 2, 3, 10,000. Now we used to use, Michael and I used to use this as well, the 10,000 contract chart. Bullish cross, price pulls away, price pulls back to physically touch, up close, and there's your goal for the day. Oh, and you don't need the volume indicator because every candle is exactly 10,000 contracts. Every time 10,000 contracts of the S&P 500 exchange hands, you get a new candle. Has nothing to do with time, has nothing to do with price. Our chart that we use in the live training room every day, the range chart, has nothing to do with volume, nothing to do with time. It's only about price. So you've got time-based, volume-based, transaction-based, price-based, you know. However, it's the same information. High of the day, low of the day, same. The 50% retracement from the high of yesterday to the low of today doesn't matter what chart you're on. High of the day is high of the day, low of the day, low of the day. So you're just changing the way you display the same information. Like one of those transformers, the cartoon thing. Yeah. So let's deal. S&P, Dow. See, now we were just discussing. Am I drawing anything here? No. And the low was 87.50. So I hope you got the 28.87 price sticker, because otherwise it may not end well. 28.87. Yep, 87 was definitely the sweet spot. So another day, another trade. All right. So I'm going down 25.95, 25. Well, that's not even a real number I put in there. I better correct that. Note to self: don't do radio and trade at the same time. Okay. So that should say 25955. 25955. I missed a 5 there. No, I didn't. It's supposed to be 25955. Yeah, that's right. To 25930. Yeah, that's correct. Okay. All right, we got to get through this. Got to get her done. Okay, last night, Concierge trade alerts. I already put it up so you can make a copy. So let's just go through them real quick. On the Dow, consider selling 25930. 25930. Now, this worked out okay. However, when I make this mistake, it typically won't work out. So, see, this is this week's zone, 25920/925, and I put a recommendation to sell 930. I would never do that intentionally, and let me tell you why. I'm pretty sure you already know the reason why. 2593025. Because there's only 5 points of room to run to hit the zone. Because you have to expect this to be good support. Like this was good support. Like this was good support. You have to expect this to be good support until it isn't. Okay? Well, when this candle opened and took out the low of that candle, I think we're onto something here. So this was in error, but it is what I published, so we're stuck with it. Did it work out? Yes. Where should it have been? Well, since price is running into a zone where we expect good support, then you either wait or you have to get your order on the other side of the zone, targeting the zone below. 258. Okay, I got that wrong. Did I? 258. Yeah, I did. Sorry. 25850. /55. So 50/55. 25920/925. Yeah. Okay. So anyway, from 930, swing low was 841. Oh, so we got 89 points. The email also said, if the opportunity presents itself, to consider buying 26020. Make that 26020, which stopped you out. Sure did. 26020. I waited a long time for that last night too. I remember. Wow. 2602. That's cruel. It really is. And it's also the truth about trading. We went through a period where everything just flowed. And you know what? When that's happening, when that's the season that you're in with your trading, you have to recognize and understand that that is what's going on. Okay? Remember, this is a business based on probabilities. Does that mean your profitable and non-profitable trades are evenly distributed? No. It means exactly the opposite. So just as you get, down on yourself when you have a number of trades that get stopped out in a row, when the opposite happens and you think you're Goldfinger and man, everything you touch turns to diamonds and you can do no wrong. In other words, you've had an unusually long string of back-to-back profitable trades, the pendulum swings both ways. When it's swinging in the direction of, you know, lots of profitable trades back-to-back, well, you know, it's tough, but most people, you could probably ride it out, you know. It's when the pendulum swings the other way, and for no explainable reason, you keep getting whack, whack, whack. You've got to learn to balance yourself, okay? Because really, that's, I almost want to say that is the determining point of whether or not you will go on to become a consistently profitable professional trader. If that's your goal, to trade for a living, in order to trade for a living, you have to be able to sit through, pick a number, 10, I don't know, 10 back-to-back stop outs without freaking out. Now, doesn't mean you don't have to get up, walk around, clear your head, pet the dog, make a sandwich, take the day off. How long has it been since you had a vacation? I mean, it could be any number of things, but it doesn't mean go. What it means to so many people is back to the drawing board. Back to the drawing board. But you get stopped out on that 10th trade, man. Now, while you're away from the computer kicking the wall, and not any living thing, and put your boots on before you kick the wall. While you're screaming at the heavens, according to your setup, the next 15 would have been profitable trades. You don't know what's going to happen next. When you get on that roll, and every trade's just ringing a bell, you can get casual, you can get careless, and boom. However, there'll be times when you're not casual or careless, when you're doing your best work, and you still have less than stellar results. That's the truth about trading. And what separates those who give trading a try and those who become traders is the ability to weather both conditions. That hot sunny day and that cold rainy night. Okay? They say, whoever they are, the acid test for determining if someone is a professional trader or not, when they step out of their office or away from their platform, you can't tell if they just made $1 million or lost $1 million. Because it's just another trade. And if somehow you sense that you're just never going to be okay with that, not knowing what's going to happen next, if you can't be comfortable with that, then you got to rethink the whole deal. Because it requires that. It requires you being able to separate your emotions from your decision-making process. And obviously it's not easy. There's nothing easy about trading, but it can be simple. Frederick, I think he's got it. Oh, okay, David, yeah, you got that? Okay. Frederick says, that is what I was asking in last week's partner meeting. You know the answer now, but if this happens again, just avoid trade. Or does the CTA trump the weekly trading zone? Yes, Frederick. You know what? I had an example the other day that was just absolutely perfect for answering that question. And I was going to save an image of it, but I don't think I did. So tell me, which one are you referring to, Frederick? Are you referring to? This is what I was asking in the last. I don't know how long ago you wrote this. Just a few minutes ago. The CTA at the weekly trading zone. Okay, on which market? Over here. I see. Okay. On the one I was talking about. All right. Yeah, I mean, that's 80. That's whatever that you wouldn't have gotten. But rules of the road, guys, for anybody, Concierge Trade Alerts or LOGIC247. Frederick last Thursday night at the Partners Workshop had asked which carries more weight, the alert or the weekly trading zone. The Concierge Trade Alert or the trading zone. And I won't go full-blown into the discussion that we had, but I would not do this intentionally. Okay? Now, the weekly trading zone is carved in stone for the entire week. The alert is in the moment, so to speak. It's what's happening right now. But think of of the zones as a playing field. You got your 50-yard line, the 40-30 down to the end zone, and then going the other way. So an alert is something that happens inside of the on the playing field as price moves from the 30-yard line to the 40-yard line. I'm taking a lot of poetic license here, dramatic license, whatever. So I wouldn't do this intentionally, but when I do, then you know what to do. Either call me, email me. If you can't get a hold of me, depending upon how much experience you have, number one, just sit it out. Just go to the next one and make a note to ask me when we speak again. Or if you have, you know, some savvy, then you'll probably know that I made a mistake. But the best rule, I guess, would be to just let it go. Just let it go. Now, Now, I had said that this was a stop out, all right? It's 25020 is the entry. Maximum risk, we don't, well, I mean, it's your trading business. You can risk whatever you want. But our guidelines, our best advice on CTAs and the L2s, not to risk more than $300 per contract. There could be some extenuating circumstances, but and some markets beg for a little more room. But in offering a general guideline, if you have to risk more than $300 per contract per trade to find out if it's a profitable idea that you have, you could probably, and if it doesn't stack up, then just wait for another opportunity to come across your desk. Now see, some traders would have to go look for another opportunity, but you don't. Because with LOGIC247, opportunity finds you. Yep. Yep. Now, I don't know if this will illustrate the point or not. But we'll see. Okay, I'm glad we got that worked out and sorted out for you there, Frederick. Now, again, were it not for the zone here, and that's just, I always check. Just know that I always check, but sometimes I'm human and I make a mistake, and that's what happened. Anyway, bearish cross really makes me feel like I have the wind at my back as I trigger into this trade. Over here, bullish cross, same. Now that $300 we talked about, this is the Dow, which pays $5 per point. So if we take 300 and we divide that by $5, that's going to tell you that the most you can risk point-wise in this market is 60. That's the maximum. So if you have an entry at 25,020, if you subtract 60 points, that brings you down to 24,960. I'm sorry, 25960. Okay. So price triggered 50.20. So far it pulled all the way back to 68. Okay. Now we don't determine our stop mathematically the way that I just did. We have a process, a formula that we go through to determine where our stop needs to be. Then we look at the numbers and see if it's acceptable. Okay, because of what the chart says, the stop has to go here, and if that's more than 60 points, then that won't work. Now the S&P is at $50 a point, and so it's 6 points is your maximum risk. Okay. And any time, and I'll just throw this out for the heck of it, Concierge Trade Alert or L2, if you have a trigger and your indicators contradict, do not trade the alert. I mean, yeah, sometimes it'll still work out, sure. But if you don't honor your own set of rules, you'll reach a point where you no longer trust yourself. And that's not a good place to be. So honor it even when it hurts. I'm serious. Okay. All right. On the Russell, last night's email said to consider selling 1728. 1728. Okay. Important prices, important areas. Almost always tested. 17. But a little aggravating when it happens like this. It does highlight the fact, though, that it really is an important price, important area. Okay. So we get there, trigger, and this. Now, I know we've all said it, probably screamed it. Why is it that every time I get into a trade, it immediately reverses and goes the other way? Like here, important price, important area. And again, the email said consider selling 1728. Now, it aggravates you, it irritates you, it might even constipate you. But what is it? What is it? Why does the market always reverse right when you get to a trade? Well, here's the deal. If you had not taken this trade, if you had not sold 1728 right here, right now, this chart would still look identical. I know about butterflies in the jungle or whatever. Yeah, it would have still stopped where it stopped, pulled back to here. If that makes me a Calvinist or something, I don't know, and so be it. Oh, I don't have that tool on here. I was going to go. Oh, oh gosh, what was his name? If you're in the audience today, Joel, are you here today? I missed you in the session yesterday. I was there, and you had 2 sessions booked, so I don't know if one was a rebooking, but anyway, I left you a message, so give me a call. And who's on deck today? Hal. Okie doke, Hal. I'll see you shortly. And I guess Joel is not here. Okay. All right. 1728. And it pulled back to 3280. Call it 33. At 33, that's 5 points. At $50 per point, $250 per contract. Now, depending upon where you had your stop set and how you set it, this could have stopped you out. It might not have, because there's still room. There's still another point worth of room on top. It did stop you out. It triggered again, and it looks like it's triggering again here. Okay, so we'll for the sake of argument, we'll just call that a stop out. A leg and a retracement and a leg. Okay, so from 1728 we made it down to 1713. That sounds about like 15 points. That's what the market made available. 15 times $50 per point. $750, I guess. Now, we don't get out at the swing high or swing low. So that's not what you took away from this trade if you trailed it down. It's what the market made available. What you're able to take out of the trade is wherever your stop is positioned as the market begins to retrace, takes you out, and that's what you earned on that trade. That's what you earned for your hard work. You didn't win anything, you earned it. Okay. Okay. All right. Now, is there anything else? Oh, yeah, the long side, it's just never triggered. All right, moving on. Crude. Came set right on top of the little box. All right, last night's email said to consider selling 68.95. 68.95. I waited on that for a spell. I remember. 68.95. Now, is this a little unusual? Well, yes and no. I wanted to point this out, the slice. Okay, remember, I always tell you there's three things that can happen at a weekly trading zone. We're always striving for simplicity. Just take it to the lowest common denominator. There's only three things. The most likely is consolidation. We just see it over and over and again and again. That's the most likely. That's probably 80% of the time, okay? No, yeah, whatever. 75, okay. We'll go with 75. 75% of the time. That's just a number. The second most likely thing is rejection. This is picture perfect rejection. Okay. Now, this was a big green candle all the way up to the zone. Big green candle. It runs up there, rings the bell, but as it goes to ring the bell, it realizes that the bell is actually a hot stove, and so it snatches its hand back. Rejection. Now, the third and least likely, I don't know what percentage, but some percentage, price slices through the zone as if it were not even there. Then it retraces back up to the zone that it pushed through, or if it were coming from the other direction, it would pull back this way to confirm good support. Here it slices, pulls back to confirm good resistance, and then it's on its merry way. The unusual part of this is that it didn't follow through to the zone, that it somehow felt the need to go all the way back up, burn his finger, and still hasn't made it to the zone. $68.95 was the number last night in the email. $68.95. So the swing low here, 68.67. So round that up to 68.70. You got what? 25 points. 60, 70, 80, 95. Yeah, 68.95. Okay. $280 per contract. That's what the market made available. $280 per contract available. Okay. And important prices, important areas, almost always tested. I actually had a little mini trigger here, which, I mean, these can, as we've discussed numerous times, different traders have different methods that they've chosen in regards to both the Concierge trade alerts and the L2. When I publish a number, that's the number. I used to say consider being short below a certain number, or consider being long above a certain number, which was my way of saying, trigger at this price, but I changed the way I word it so that there's no second guessing. It's just clear. However, some people will wait for a 1-minute candle or 5-minute candle to close above or below the alert, as a sort of confirmation that it really is going to move higher or move lower. And there's absolutely nothing wrong with that. We all know that confirmation costs money. Okay? The farther you get away from the initial place that you wanted to get in, that becomes, once you do get in, that becomes increased risk. You have more risk on the trade now because you wanted more confirmation. What? No. Think about it. I gotta write that down. You have more risk because you wanted more confirmation. Now, if anyone doesn't understand what I mean by that, I'll be happy to explain it, but I'm pretty sure you guys all do. So this swing low here, gosh, it was 84. That is $110. It's $10 a tick. And this one dropped to 68.60. So that would be $350 per contract. And then back above again. And the market made, so 200, another 200. That's crude. When, of course, you know, in my mind's eye, in placing this alert target, it's right there. Price always moves from one zone to the next. It just doesn't always do it in a straight line. Sometimes it overshoots. I think that's a last week zone. 69, 65, 70, 30 slash 35. Okay, so from this zone here at 69.60 slash 65, the next zone overhead. Oh, I'm only off by $1. Let's try that again. How about that? $70.30 slash 35. Then above that, $70, 75. And the next one's at 71.50, which I don't think we're going to see, but I won't rule it out. Okay, so that takes care of crude bonds. We said to consider buying 143.20, not a possibility. Selling 143 was possible. The swing low, 142.28. 2 ticks. Stop out. If you're new to trading, you might look at bonds and go, wow, 31.25 a tick. Or is it 31.75? I got 31. $1,000 divided by 32 equals 31.25. Yeah. a new person might go, wow, 31.25 a tick, that's good, I want that. Well, it also costs 31.25 a tick if you're on the wrong side of the street. Just keep that in mind. I came across something last night. Oh, well, I didn't just come across it, but I was looking at the silver contract, and silver's $25 a tick. I mean, that's in the same, that lives in the same neighborhood as bonds at 31.25 per tick. When you're on the right side of the trade, it's awesome. When you're not, not so awesome. And there's a lot of underlying factors that affect things like bonds and, you know, and precious metals. So if you're just getting started, maybe the best advice is to, you know, work on something else. And then if for whatever reason you really do want to trade bonds, you can. Margins are, I looked those up the other day for somebody. Yeah, this euro dollar thing has me real puzzled. $214 daily margin. Overnight margins, 484. I'll call Burton. He'll give me the skinny. 30-day U.S. Treasury bonds. Overnight margin, 2,530. Intraday margin, 1375. But I have seen some brokerage firms offer a low rate on bonds because they are popular. What kind of daily volume do we have today? Like most brokerages, give you the Dow, the Russell, the S&P, NASDAQ for 500 intraday, and I've seen bonds go for as low as, I think it's 1,000, maybe less. So far today, 253,916 contracts. Yesterday, 374,000. That's a respectable number as volume goes. In fact, just to give you an idea, let me just put this on daily. Now, every time you turn on the radio in the car, or the news, or whatever, you always hear about the Dow. There's only 30 stocks in the Dow. There's 500 in the S&P 500. And they always talk about the Dow. The Dow, the Dow, the Dow. Anyway, on an average day, the S&P's trading. Now, when I first started trading the S&P, it was between 2 and 3 million, pretty consistently. I think because there's so many things available to trade these days, that's why volume has trimmed back. But I guess you could say we average 1 million a day. If you look at the horizontal line and the red number on the right hand side, you know, because you got days like this one here where we didn't even break 1 million. Yeah, that was unheard of back in the day. Bullish cross, price pulls away, price pulls back to physically touch, you get it up close, and bang, 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 shoot them up. Okay, the Dow. All right, average daily volume on the Dow. Now, this has increased. In 2005, when I switched from equities to futures, about 80,000 was the average daily volume. 80,000. Here we have an average of, hasn't grown that much, 120,000. NQ. Average daily volume. Well, 250,000, 300. Yeah, there's like an average day for the Russell. I think back then it was like maybe, I don't know, it might have been in the same neighborhood. Crude, GCLV. Okay. Average day, 300,000. 300,000 contracts. 250. Now, the reason these are so small is we were leading into a new contract, and so that's the story on that. Now, we already said bonds, okay. 200,000. Gold. Oh, I guess we call it 175,000, 200,000. Quite respectable. Soybeans. CSX. Okay, average day, 75,000 contracts. Euro. $179,000. And the GE. I can't wait to hear the story on this guy. Now that's the December contract. Let's see what's in the U. Definitely looks tradable from here. God, what a beauty. Bullish cross, price pulls away, gives you a doji, price pulls back to physically touch, gives you a doji, up close. Just go on vacation, I guess. If you're the vacationing sort, not saying that you are. Okay, these fib numbers are outdated. Draw some different ones. Okay. Actually, I'd rather just look at the last leg down. Okay. So we had missed the 50% retracement by a couple ticks. Swing high was 75.6150. So leg, a retracement up to the 50% Fibonacci retracement, and now a continuation of the leg. Where might we expect price to go? Swing high, swing low. And I know somebody wants to say sweet chariot. I got too much stuff here. It's just okay. We got it. We got it. I just want to make sure that was lined up. Okay, so from the swing high to the swing low to the swing high of the retracement. This is purely math. Mathematical projections say, based on Fibonacci's work, that right here $7,500 round number. You see how this is starting to curl up? Now, this entire leg, if we measure it, this is not scientific, it's just a line. Okay, so you take, we measured that leg, the first leg, the initial leg. Okay. Now we're going to measure the second leg, and if I had done everything just right, the tip of that line would have matched, would have lined up perfectly. So you get the point. So this is Fibonacci math telling us the potential for price is. Does that mean it's not going to just find good support here at the CFMA1? Do a bullish cross, take out that high, and never touch any of these numbers? Entirely possible. But you made such a convincing argument for, yeah, well, embrace the possibilities. Okay, last night, wow. What a spike. Oh. I have apparently I used up all of my tabs. Oh, come on. Don't be like that. Huh. All right. Last night's email said to consider selling 76.26. $76.26. That's not possible. 76.26. I guess it is possible. What time do these doggone things go out? 6:30 p.m. last night. Okay. So 18:30. All right. Okay, fair enough. I just want to make sure. Okay, so this is when the alerts went out. And so I just want to make sure it was proper. 76.26. See how price tried to come back. I don't think it quite made it. Oh, it got to 76.2450. Tried to come back. Didn't make it. All right, so this first drop, basically $100. No, $200. From 26 to 16, it's 10 points. Except we don't have, I guess it's actually 17. So 9 times 20 is $180 per contract. That's this move here. The market made $180 per contract available. And over here, I believe the French word is beaucoup. It means a lot. 626 to 440. Wow. 186 points. Well, that's worth writing down. Oh man, it's late. I gotta go. How did this happen? 186. Yeah, I know. 186 times 20. $3,720 per contract available. Again, we don't get out of the swing high or swing low. Nobody does, except the lucky. But the market did make almost $4,000 per contract available. Between the hours of 1:30 a.m. Eastern on September the 5th and 12:30 Eastern. Yeah. Is that right? Is that right? All right. Hi. Man, what a nice. Now that's why, guys. I know. I said I got to go, but I do. Those of you who have the indicators, you know what? The indicators would have actually taken you, if you had no target to work with and you were working with just the indicators, okay? Or let's say you'd already blown past your target and you were riding the indicators. Okay, this is the truth about trading. It gave you an exit signal. Gave you an exit. It said, get out, get out. So you got out. Actually, no, it didn't. Correct me if I'm wrong, but I always tell you, price needs to cross CFMA1, and then you need a close above the step line. Step line must cross. So I mean, let's not argue, but I don't know about you, but I didn't take this trade personally, so let's move on. Okay, thank you. I second that emotion. All right, good word for the day. And I got a meeting with Hal and who knows what else. I don't. Alright, we began a little mini-series yesterday. What's in a name? We've heard, most of us, I think, have probably heard Jehovah Jireh, Jehovah Raphi, my healer. These are the different names of God as read from the good book. What's in a name? Part 2. 2 Chronicles 20:15. For the battle is not yours, but God's. I always took great comfort from that scripture. When Israel was threatened by the mighty forces of Amalek at Rephidim, God gave them a supernatural victory. Realizing that God was fighting the battle for them, Moses built an altar to Jehovah Nisi, the Lord my banner. Hear his words. The Lord will fight for you, and you shall hold your peace. Exodus 14:14. Be not afraid nor dismayed, for the battle is not yours, but God's. Why then do you discourage yourself into defeat, trying to win the battle in your own strength? That'll preach. Somebody, I know somebody felt that right there, right then. Why then? No, I'm going to back up. Be not afraid nor dismayed, for the battle, it's not even your battle. Think about what that means, the ramifications. God and the enemy got into an argument, and the lives we live today are the result. We're the collateral survival of that argument. Why then do you discourage yourself into defeat? That right there, that spoke volumes. How many times have you been down but not out, but you trash talked yourself right out the door? Why then do you discourage yourself into defeat, trying to win the battle in your own strength? You engage in a fruitless cycle of fleshly repentance, resolutions, struggles, defeat, and discouragement, which leads you right back to more fleshly repenting. See the cycle? We got a cycle here. I'm not a cycle trader, but I can see the cycle, and I live the cycle. We all do. You mess up, you repent. You make a resolution. I'm never going to do that again. Then you struggle and struggle and struggle not to do that again. And then guess what? You do it again. And then you get so discouraged that you, what? Repent. You do. You repent and you mean it. A broken and contrite spirit. You go before God. You repent with every fiber of your being, and God says, I forgive you. And you resolve, thank you, God. Thank you for your mercy. Thank you for your grace. Oh, I'm never going to do that again. That's the resolution. Then there's a little pink cloud, kind of a, couple of happy days there. Probably even break out the old bicycle, blow the dust off of it, cruise around the block, realize that's a young man's game, put it back in the garage, and head for the lazy boy. You mess up, you repent. You resolve you're never going to do it again. You struggle. When the temptation comes, oh, you struggle. You struggle good. You do all the right things. You read the Bible, you talk to God, maybe you light a candle, I don't know, however it works in your world. Do everything you can in your own strength to fight that temptation, to beat the enemy at his own game. And then guess what? Defeat. Defeated once again. Every time you go up against the enemy with your own strength, there's only one way it can end. Defeat. Not his, yours. He's been practicing his craft since before the beginning of time. There's a big argument there. Has he been practicing his craft since the beginning of time or since before the beginning of time, as you and I understand it? I'll let you work that out for yourself. The truth is, he's been practicing his craft a long time, and he's got some pretty good tools, some pretty good tricks, from alcohol to drugs to you name it. If it's dark, if it's ugly, if it's evil, it's in his toolbox. And some of us, sometimes we make ourselves such easy targets. I mean, don't we? You know, it would not be a bad idea to write down repentance, resolution, struggle, defeat, discouragement, and this is where you loop back around to repentance. And it just keeps repeating and repeating and repeating over and it's an endless loop that will carry on as long as you allow it. Only one way to stop it. The only sort of spiritual conflict that's ever successfully won is the one that God fights for you. He doesn't expect you to win the battle. What he expects is for you to surrender. Not to the problem, not to the enemy, to him. Surrender to him. He says, if you surrender to me, I'll kick his butt 9 ways to Sunday. To coin a phrase. He doesn't expect you to win the battle. He just wants you to surrender to him and let him fight it for you. So, am I not supposed to fight at all? You might ask. Oh yeah. Yeah, it's in the book. You are to fight the good fight of faith. 1 Timothy 6:12. Now, I don't know what your problem is. We all got problems, but whatever your problem is today and whatever my problem is today, tomorrow, or any day, we first surrender to him so that we're under his covering, and then under his covering, with his wind at our back, with his hand on our shoulder, we fight the good fight of faith. Yours is not a battle of exhausting effort. It's the battle of believing. Believing. But am I not to wrestle like Jacob did? Well, here's 2 things. Jacob didn't win by wrestling. He won by being rendered too weak to continue wrestling. And you know, he had a bad hip the rest of his life. It's a true story. Paul said this, when I am weak, then am I strong. Yeah, okay, admit it. That always confused you, just like it confuses me. But I understand it. But it's still confusing. 2 Corinthians 12:10. When I am weak, then am I strong. Kind of like, and I don't take this lightly, so when I make a reference to your trading or my trading or trading, I'm not trying to be cute. I'm trying to make it relatable, okay? Paul said, when I am weak, then am I strong. Parallel that to trading the way we teach. When you admit that you do not know what's going to happen next, you then put yourself in a position to actually become the consistently profitable trader that you've always dreamed of being. But as long as you cling to that illusion that you can know the future, remember the enemy, he thought he was kind of high up on the totem pole there, right? There's meetings that take place in rooms, Guy Bill W. I've heard of. They say the way to get over a problem, the first step to getting over a problem, any problem, I don't know, whether drinking, eat too much chocolate, watch too much TV, I don't know. The first step to getting over any problem is admitting you got a problem. Until you admit until you accept the fact that you have a problem, you're not going to be motivated to do anything about it because you don't know you have. Okay, you got that part, right? When I am weak, then am I strong. As long as I falsely believe that there's some indicator, oscillator, guru, mystery man, I don't know, whatever, that can tell me the future, as long as I cling to that, it's going to be, I'll say, virtually impossible. I think it's impossible, but virtually impossible to be a consistently profitable trader, because you're always operating from a mindset that is not truth. Truth stands on its own. In admitting that you don't know what's going to happen next, you open yourself up to what's going to happen next. Do you see? See how quickly that false wall, that illusion falls? I know you've spent thousands upon thousands of dollars on classes and courses and indicators. I know. Most of us that listen to this radio show or this podcast have been down that road. And it's not just the dollars spent. It's the time, it's the hope, it's the energy, it's all of it. All that in a bag of chips. You know exactly what I'm talking about. Paul nailed it when he admitted his weakness, when he came to grips with it. 2 Corinthians 12:10. Please read that. 1 Timothy 6:12. Study that. Exodus 14:14. Give that a try. Now, Jacob wrestling with God all night, bad hip. Jacob did not win by wrestling. That's the first thing. The second thing, Jacob's victory lay in his surrender. Are you tired? Are you sick and tired of being sick and tired? Yes, uncomfortable pause, because I really want you to think about it. Are you worn out from the battle at the end of your rope? Well, one way of looking at that is you might be right where God wants you to be. Huh? You're tired. You're sick and tired of being sick and tired. You're worn out from the battle. You're at the end of your rope, and that's where God wants me to be? Wow. Cruel dude, eh? Really? God, is that where you want me, at the end of my rope? Tell you what. Close your eyes and just fall backwards. Too often, when life's troubles come our way, we run from God when we should be running to God. He's always there. His arms are always open. You could continue to fight and battle on and grow even more weary. You can surrender. Sweet surrender. Just don't surrender to the wrong guy. Make sure you know who you're surrendering to. All right? Just let go. Let go and trust your Jehovah Nissi to prevail. Because after all, the battle is not yours. That's our good word for the day. This fine Wednesday, the 5th day of September 2018. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.